Welcome, everybody, to another exciting episode of On the Couch, where we dive into the mortgage world, talk about the journey, the ups and downs, try to bridge the gap on financial literacy, and more importantly, what it takes to be a mortgage broker in today's world. I'm one of your hosts, Johnny Supa, and I'm here with
Danny Cardozo.
What is going on?
Hello, hello.
I'm not going to, I mean, obviously, I'm not the first to wear it, far from that, but I found the brand a couple of years ago. I had my aunt come from Australia, and I went to the Eaton Center. Hadn't been to the Eaton Center in ages. And I walked into the store, me and my son, and he was like, "Dad, this is so cool. I see it all over Instagram, YouTube, or TikTok, wherever he was like telling me
That
about
many
it."
years ago?
2 years ago.
Really?
Yeah.
Okay.
And I was like, cool. I'm like, I looked at some shirts, and I bought one for him and I bought one for me. But the one I bought for me is that army looking one. Actually, it's in the original intro video we did when we started On the Couch.
Okay.
And I wore it then, and then Joey Diamonds, I see him wearing it all the time.
He wears it all the time.
You wore it the other night?
I wore it the other night. I actually walked. Yeah, I'm a new customer. I'm a new customer. Is that one of the bloopers we're gonna put out?
So I think 99% of my wardrobe is, fuck, I don't want to talk about this. It's, I prefer, so here's my thing. I've been recently shopping on Shein. $7. Isabel's looking at me in the background, but $7, $12, I get a nice shirt, and I can even get like a matching pair of shorts. Some people don't like the look. I think it's kind of trendy. My wife's been in fashion forever. But wait a second, are we comparing it? No, I'm going to tell you why. So I buy a $12 shirt from Shein, and I wash it once, and it's garbage. That's it. See you later. I have shirts that are timeless from Hugo Boss, you got to be careful with Psycho Bunny. If it's made in Tanzania, it's the good one. There's two different places they produce out of.
Oh, really?
Yeah. One of them, once you wash, like the black T-shirt I've washed it 100 times, and it looks brand new every time I put it on. I have another Psycho Bunny golf shirt. I washed it once, and I can't wear it again.
Let's switch gears into what we're talking about today. And today we're talking about mastering mortgage refinancing, unlocking the potentials to your home. Let's start off with the basics, boys. What is mortgage refinancing? Danny?
Yeah, Danny, explain.
Mortgage refinancing.
Explain. What is the... No.
I mean, I think it has a negative effect to it, but it's not a bad thing. Why would it be a bad thing? You're using the equity in your property to help you out in whatever situation you're in.
But not always. Not always. Like I can tell you about a file I'm working on right now, even Stephen Markham's first deal. It was the client was at TD Bank. His renewal came up,
Yeah.
and he was at a 15-year term.
Right.
So a typical renewal or switch is exactly that. You're just renewing the exact term, or you're switching the term, but nothing changes. The numbers of the mortgage don't change, and the amortization does not change.
Right.
As soon as you change the amortization, it's now considered a refinance.
A refinance. So you've helped out a situation, and the situation is now lowering your payments.
Correct. Yeah. So when people hear, at first, like even the client, he looked and he said, "Oh, Johnny, I don't want to refi," because that was the term that came out of my mouth. And that was actually a fault of mine. Say, okay, Johnny, like, note for next time, make sure when you're explaining this, we got to talk about what we're trying to accomplish here, because his main goal was reducing his overall monthly expenses. So the term refinance can mean a lot of things, but as soon as you change one aspect of the application, like of the home terms, it automatically defines as a refinance. So if you change the term, you're changing the rate, or you're changing the amount, it automatically classifies as a refinance. You're looking for equity takeout at that point, right? So that's a different type of mortgage. You're looking to take out equity, very minimal qualifications or documentation to get qualified, because you're just using the equity based in the home. Mm-hmm. If you want to get a refi, you're looking to change the rate, the term, or the amount financed. And those three things, one of those three have to be changed. You're amortizing something. There's a term involved. When you're doing something where you don't have a job anymore and you need to tap into the equity just to carry yourself for 6 months, which happens all the time. Like it's not uncommon. That's more of an equity takeout. There's not much terms to it. There's no amortization. It's like strictly interest only payments on a 1 year term, for instance.
But when someone says to you guys, I want to refinance my mortgage, automatically in my head, it's all right, great. I get to take out money from the capital and I could use it towards any other bills that I need to pay immediately. Am I wrong?
No, you're not wrong. In some cases, that is the case.
Yeah, some people are dealing with a lot of debts, and consolidating their debts into their mortgage using the equity of their property is very common, especially right now.
Yeah. But I think
Very, very common.
I think though too, like 90% of the renewals that are coming into this office, where clients calling me and saying, "Hey Johnny, my renewal's coming up in December, and X bank is offering me a renewal at 4 or 5.5%." Well, that 5.5% on 20 years is very different than 1.5% on 20 years. That's a 4x on interest. So when you take that person and you bring them to a new bank and you get them a better deal, let's say 4.99 or 4.89%, and now you can take that amortization from 20 and go 30 or 25 years, their payment can be reduced. And to some, that's that's saving grace for a lot of people because you're creating more cash flow. But in the bank's terms, it's still considered a refinance because you're changing the term.
Okay. Refinancing as a whole. What about if they don't have enough capital? What do we do then? Because see, refinancing is very tricky.
Refinancing without capital, I'm gonna say, is impossible.
Impossible? Why?
I mean, you need equity in order to refinance. A bank is only going to lend up to 80% loan to value.
So unless you're sitting on some assets or savings or assets or savings to come up with a shortfall, the only reason why Danny and I or any of our agents will look at a refi that's going to stay at 80% is that the client can cover the shortfall, and the outcome is that we're creating a better term for the client or a better contract or a better, right? Like why would you change your terms and refinance unless
we do have lenders that will, and this is more on the private side, that will go up to 85% possibly.
Yeah.
On rare occasions, 90. We've actually cross collateralized other properties and got them to 100%.
Yeah. So you basically, so let's say you have one house, it's worth $1 million. We're at 800,000 and you need more money, but you own another property. We'll just cross collateralize the other property to pull the rest of the equity that you need. So basically you're just doing a deal on a different property, but tagging one house.
Danny, take me step by step. Walk through the refinancing process from start to finish, including the application, appraisals, and closing. What are we looking at when it comes to, I want to refinance, what's my next step?
Yeah, so we're gonna walk through, first of all, the discovery call and find out the reason to why you're thinking you need to refinance. Is it because of debt reasons? Is it because of cash flow reasons?
We might sometimes even recommend a refi because it makes logical sense.
We're going to ask you to fill out an application. From the application, we're going to build a budget so that you can see, your current scenario to what we suggest would work best for you. And then, put you on a strategy call. If you're good to go, obviously, we're going to submit for approval.
What about some of the challenges? If you had to say, what's one challenge that you face on a daily basis if ever someone comes and says, I need to refinance? What's the one challenge that you always come across?
I'm thinking, as of today, there's two big challenges. And first of all, it's equity. And second of all, it's the value of your property. Because, well, from the value of your property, we figure out if you have equity in the property. A lot of people right now, I find, are have maxed themselves out 2 years ago, and they come to us and, I want to get I want to, I need some money out of my property, and their property 2 years ago was worth, let's say, $1 million, and they received a 80% loan to value. They've been paying down their mortgage, and now they feel like they should be at 72%, so that there's, some equity in the property. But in reality is your property's actually gone down in value. So there is, with the property going down in value, you no longer have that equity that you thought you had.
So, Johnny, let me ask you something. What are the pros and cons of refinancing?
Good question. Good question. A right refinance can save you a lot of cash flow. So I'll use the file I'm working on right now as an example. He's got a renewal coming up. He's got 20 years remaining. He's renewing a 2% rate, but the mortgage amount is quite high. Okay. So now I'm suggesting to him that we go and take the best rate we can, but go 30 years. So add 10 more years to the amortization. His original was like, "Are you kidding? You're going to add 10 more years to my amortization? That sounds crazy, Johnny. That's not the rate." I'm like, let me explain. As an example, right now, your payments are $2,000 a month. Your renewal is going to be $2,800 a month. Can you cover that? Probably. Okay, great. If I put you on a 30-year amortization and the payments come back to $2,000 a month, which is what you've been paying for the last few years at a lower rate, can we top up $800 every month? He's like, yeah, of course. I said, okay, great. So let's put you on the 30 years, use the $800 as your principal reduction. It's 100% principal, no interest in that. And we will take, in 5 years, when you're back to 25, right? Because you went from 30 to 25. When we come back to the renewal time in 5 years from now, or 3 years, whatever we decide to do, we can then go down to a 20-year amortization or 15 years. But you would have paid so much more principal. So now when we look at the amortization schedule and you say that your balance right now is 800,000, renewing where you are, your balance is going to be 874 or 770, for instance. Say you only paid $30,000 in principal. If you take my method, yes, we're stretching you 10 more years, but the balance after the term in 5 years will be 750. So we're $20,000 ahead. Yes, you're looking at that. We're taking the amortization longer, but we're going to be ahead in 5 years. In 5 years, when it opens again, we put you back on track. If not a better track, we will pay your mortgage off sooner. And that is why Danny and I are different than most other brokers. Everybody wants to sell you a mortgage. We're selling you on how to exit your mortgage and how to get mortgage free.
That's the greatest piece of information that you guys have ever delivered, ever.
That is the reason why Danny builds these budget sheets, and we show this to you. Like, it's the you know what it is? It's like when you talk to your mom and dad and they want the brick and mortar store and they want the big brand and they want to go in there, but you're not being educated on how to financially exit the mortgage. How do you get out of it? I can get you in one. That's easy. How do we get you out? What's the plan? And that's why people like working with us, because we're here today, we're here 5 years from now, we're here 9 years from now, we're here 15 years from now, and your 30-year amortization, your 25 years, we'll make that 17 years.
So that's brilliant, positive. Danny, negative to refinancing. What are the cons to refinancing?
So, I mean, if you are not taking the strategy, obviously you're to get mortgage free is going to take that much longer. That is the negative to it. And you're always tapping into your equity in your property.
Consumer debt.
Getting a refinance? No. If anything, if you're consolidating debt, it's actually going to help your credit score, right? Because now you've used the equity to pay out whatever debt you have, which is automatically going to increase your credit score.
Your mortgage amount or the loan to value of your property does not affect your credit score at all. Like a credit card, for instance, the utilization of your credit card, if it's $10,000 and you're utilizing $9,000, that's a 90% utilization. If your house is worth $1 million and you have a mortgage of $900,000, it's not the same. The utilization calculation does not affect your credit score.
Okay.
Just
now
let's talk mortgage.
Let's talk refinancing over consolidation companies. Now, why are people going to opt to do refinancing opposed to just going with one of these consolidation people where they can lump sum you in and pay one payment every month?
Okay. I don't know, who wants to go first?
I mean, why would you refinance over go to them? Well, first of all, refinancing is going to pay off your debts without affecting your credit. If you go to these consumer proposals, they're going to create a payment for you for 2 years, which is going to be on your credit bureau for the next 7 years.
But also, when using the home equity to consolidate debt, two things happen. Like Danny said, number one, you're going to increase your credit score immediately because now you got rid of all the utilization. Number two is that 90, not, I would say about, I don't know what the percentage is, but majority of the time, the bank is not asking you to pay and close or pay and discharge those credits. So when you go to a trustee or one of those credit trustees, they're going to not only pay or they're going to settle with the creditors, they're going to pay and close. So now you have no credit. You've got a proposal or bankruptcy on your file. You're only going to get a Capital One $100 or a $1,000 credit card that you have to go to Capital One, deposit the money. Then once you deposit the money in some sort of mutual fund, it's locked. It's your money. And it's just a prepaid credit card. And that's where you start rebuilding your credit with.
All this happens when you go to a consolidating company?
At the worst case scenarios, yes. So now you've got, let's say you have all these credit cards, they're gone. And all you've established is a proposal, no credit, rebuilding. The nice part about it is that you've kept your equity in the home, and that's, I mean, there's a positive to that, I guess, but I wouldn't recommend that. I mean, if you have the equity and you can qualify, get rid of the 20% interest and go get 6 or 7% somewhere, or 5%.
So you would advise people not to consolidate? Try everything first.
If you actually own a home, if you're consolidating your debt, they look into the fact that you own a home. So are they able to help you out as much or as good as someone who doesn't have a home? And unfortunately, if you own a home, you actually are paying out a lot more than if you didn't.
Using equity at the right time is essential for anybody to grow if you're in a predicament or a situation. So refinancing can be done correctly and you could use it to your advantage. So you just have to have the right consultation and make sure that it's solving the right problems.
I mean, even refinancing to maybe purchase another property is a great alternative too.
Yeah, for the last 10 years, like Ontario homeowners have grown 40% in equity, if not more. So we have a full training module. It's called One Home Away, if I'm saying it correctly. And Danny talks about just the importance of the return of your investment buying real estate versus mutual funds, investments, stocks, bonds. The return on your investment on real estate is far greater than what you'll ever see in the traditional savings account or mutual funds. So we're talking about Ontario. That's what we know, and we're going to stick to that.
So no, you know what we know also? We know about tequila. Yes. Now this has to be the most elegant looking bottle we've ever had on the show. Am I wrong? Danny, why don't you tell me a little bit about this beautiful, almost looking like a grappa bottle?
We got here. We got a Cali Rosa Tequila Rosa Blanco, I guess.
A whole lot of names there. So what are we drinking exactly?
This is a Blanco tequila. It's $80 at the LCBO. It's light, it's floral, it's a bit sweety and fruity. Adam Levine.
Huh?
Adam Levine from Maroon 5.
Yeah, that's sort of behind this.
Yeah.
Okay. Let's talk aesthetically. Me personally, I like it, but for a tequila bottle, doesn't hit. What do you think, Danny?
Yeah, I mean, I agree with you. It looks like an old school bottle, alcohol bottle, like it was back in
It
the
looks like grappa.
Okay, yeah.
Because it has the long
It does,
spout.
Yeah,
right?
that too.
So what are you giving it aesthetically, based on the fact we're drinking tequila?
6.5.
Okay. Price-wise.
Price $80 for a Blanco, unless you want the rosé, the sweet fruity taste, the floral and all that. I don't know if I would do this bottle at $80, but
Flavor? Have you ever tried it?
flavor, I mean, you can really taste the additives in this one. Again, it's good for sipping. This would probably be really good as a mix with gin.
So what are you giving it?
Yeah,
What are you giving it?
I'm giving this bottle 7.
7 overall.
Yeah.
Beautiful. Johnny.
There you go, Johnny.
All right. So thank you. So this bottle actually has some meaning to Danny and I. Last year we were very gracious, or we were able to donate 3 of these bottles to Sarah's soldiers. So a friend of ours is battling MS, and she had an event downtown Toronto last year. So we donated a few of these bottles to her event, and it was actually the first time I tried this tequila. When I first saw it, I thought it was just a rosé. I didn't know I bought tequila. I thought I bought very expensive rosé. I didn't know. It doesn't, like it's cut off, right? I didn't really know. I tried it then. I liked it then. I liked it a lot. And then I had it again on Saturday night.
Yep.
And we were sipping it with just a cube of ice, and I really, really enjoyed it. And I'm not a Blanco guy, and like Danny said, you do taste the additives. However, the look is absolutely horrendous. I'm not a fan of this at all. To me, it looks like a pink. Like if you put it looks like a grappa bottle. This is like, I would buy this bottle just to put my grappa homemade moonshine into this. So I'm not a fan of the aesthetics too much, but I do appreciate the woman touch. So I think it does have some appeal to the female industry. It's not really manly as tequila. I'm not sure.
You find it weird that like the sticker is sort of cut off.
Yes.
Right?
I think it's done on purpose.
For a bottle. It is done on purpose, but yeah,
Yeah,
that's
all
what
of
I'm
them.
saying. Do you find it weird? Like they're all like this.
It is. So look wise, it's going to get like a 5 out of 10. Yeah, this is going to get, but the price is a little pricey. It's not a real tequila. It doesn't have the rom noms.
It does have it. I actually checked in the back. Take a look, man. It's there.
Oh, it does.
Yeah.
It has a CRT and a nom. Sorry. I apologize. So my bad.
So what are you giving it price-wise?
Price wise for $80, it is a little pricey, but I get it because it's pretty. Like it is pretty. But the taste, I'm sorry,
They're
man.
different, right? So like they can up the price
Yeah.
because they are a different.
I think they're after a different demographic as a whole. Like this is very feminine. The taste is, I really, really, really enjoyed it.
So what's the taste?
I actually give it a 7.5.
So overall, you're 6.5.
Yeah.
Okay, fair. Danny, let's start off with you. If people had to find us, where could they find us?
You can find us right here in Bolton at 12 Park Boulevard. We are your Nesta Financial, on the Couch podcast, on Spotify, YouTube, and all your other listening platforms.
And your Instagram is?
Mine is Mortgages by Danny C.
And you could find us on the Couch Podcast 23 on Instagram, YouTube, Spotify, TikTok. Guys, if you like the show, please share the show so we can grow. Till next time, comment, like, share.
It's so lonely and
Your Nesta
cold.
Financial.